For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
Welcome back to another Saturday Sendout from the Simple Side. I've got all my portfolio updates for you and last week's market news so that you can stay up to date and be the smartest investor in your investing circle. Let's get into all of it right now.
Welcome to the Simple Side. Market beating picks inside. There's no jargon and no time to waste. Join the Simple Side and end up in first place.
All right, everybody, like I said, thank you so much for joining us back here at the Simple Side. You're listening to the Saturday Sendout podcast, which of course comes out every single Saturday from the Simple Side newsletter and gives you all of the updates from the free section of our newsletter. Of course, we do have a paid version, which you can go and find at thesimpleside.substack.com. All right, with that being said, I think it's time to jump into today's newsletter. Of course, we are going to cover market commentary. We're going to talk about everything that happened this past week, give you some insight into the news. We're going to talk about some insider trades that happened over this past week, ones that are very actionable and able to be invested in. Of course, we track all of this on a spreadsheet as well, so you can see how insider trades have performed over the past few weeks. We're also going to jump into an interesting trade idea that we have, or interesting trade ideas that we've had in the past, and talk about how their performance has been. And then we're going to talk about our portfolio performance. Once we talk about that, we're going to get into the paid section, which is where we talk about our portfolio holdings, updates that we're making to these holdings. And then, of course, we do weekly picks every single week to show that you can beat the market right now because of something that we call the dumb money hypothesis. So if you're interested in getting all that, again, go check out the paid subscription, thesimpleside.substack.com/subscribe to find all of that information. As a reminder, all of my portfolios are available to you via copy trading on the Autopilot platform. But note, these are not get-rich-quick portfolios. I am focused on long-term market outperformance, and whether that comes in a month or a week doesn't really matter to me. I'm more focused on the 1-year, 2-year, 5-year, 10-year performance of these portfolios, and that is how I treat everything in this newsletter. All right, without any further ado, let's talk about what happened over this past week. Of course, we saw fresh highs Tuesday through Thursday in the stock market, and then a big cooling on Friday as profit-taking hit the mega caps, tech, semis, and the cyclicals. Breadth quietly improved midweek with small and mid caps outrunning the giants, and a big sign that the rally can walk and chew gum at the same time. Rates, of course, drifted higher. We saw the soft landing territory intact still, and September cut odds are still quite high. Oil hovered around $64 a barrel. Gold stayed firm. And of course, the VIX stayed sleepy until a quick Friday spike. But that wasn't the only spike that we saw in the markets this week. Of course, we saw Q2 GDP revised to 3.3%, which is not something that many people were investing. We expected it to be quite a bit lower. We also saw jobless claims stay low. Both great signs, even though we had a rough Friday. Everything looked pretty solid this week. 2-year yields meandered around 3.62% to 3.73%, and the 10-year stayed around 4.21% to 4.33%, leaving the door open for a modest Fed trim next month if PCE doesn't misbehave, which of course is the Fed's favorite gauge of inflation. Housing was relatively mixed and consumer gauges were fine, but not fantastic. In market terms, that's just right because it cools inflation talk without chilling the earnings of companies. So we're actually sitting in a pretty good place right now, but whether that is going to last for the long term is what investors aren't too sure about. Communication services this week led with steady strength in Alphabet and Meta, while energy caught a bid as crude inched higher and balance sheets kept doing the heavy lifting. Defensive lagged as investors rotated towards risk again, which is very interesting to see in the market. That is probably due to the rate cuts we're going to see here in September. The equal weight S&P perked up midweek, hinting that leadership isn't only a 2-stock show or a 7-stock show, depending on how you look at it. There was a lot of movement in the AI, chips, cloud, all of that great stuff. We saw hype meet housekeeping. NVIDIA delivered record revenue, a huge networking print, then reminded everybody that the China market is complicated and guidance can be a bit responsible. Shares flinched before the market remembered that AI data centers don't build themselves, and NVIDIA is likely going to capitalize on that. Marvel's outlook was knocked down quite a bit on Friday and knocked the wind out of semis as well. Dell seems to think that they're going to be hitting $20 billion in AI server sales next year, and HP has had a bit of trouble integrating AI into its PC market. Software looks strong this week as well, with names like MongoDB, Box, Snowflake, Nutanix, and CrowdStrike all running up higher. No surprise there, a lot of this stuff is going to be dealing with all of the AI infrastructure, and they are going to be big names when it comes to keeping your data safe and together. So we'll see those names continue to climb higher, I'm sure, but of course this week was a big week of movement for them. Now, while we're talking earnings, let's talk Dollar General. They did an incredible job over these past few weeks and lifted guidance, proving that value in retail can still be there. Victoria's Secret tightened execution, raised its sales view. Pure Storage impressed with a margin and a backlog of momentum. And that's what you get when customers need faster pipes for smarter apps. Alibaba missed at the headline, but shows double-digit growth in X disposals and highlighted another quarter of triple-digit AI cloud revenue. Of course, to me, Alibaba is the Amazon of China and is likely going to continue having an incredible rip. Caterpillar was the only place that seemed like it had a rough time, talking about how their tariffs are going to be hitting their bottom line, especially when it comes to autumn movements. In the world of auto, Tesla was fighting a war on two fronts. European sales were sliding and UK lease discounts were happening as well. Of course, they've also been in a lawsuit. I think they just lost something like $200 million plus in a lawsuit in the UK as well. So not looking incredibly great there. We also saw GM recall Corvette units for fuel issues, and Nissan, whatever you want to call it, slipped after Mercedes moved to an exit from their long-standing stake in the company. Of course, strategic ties aren't going to be forever. A lot of deals happened this week, with Keurig Dr. Pepper moving towards its buy of JDE Peets. Investors didn't seem to like the move as Keurig Dr. Pepper dropped drastically on the news, but JDE Peets did jump up quite a bit. Energy and defense stayed quite busy, with Crescent Energy agreeing to acquire Vital Energy in an all-stock deal. RTX won a bid for the F-135 engine order, and Boeing secured maintenance work even as labor talks continue to creep up in the back end. AT&T lined up a $23 billion deal for its spectrum feed to 5G and fiber ambitions, and that is going to be something that's big for them. Verizon better start making moves soon, otherwise AT&T might start to become the darling of the cell world. Terumo reached an agreement for Organ OX to deepen its transplant tech. AbbVie bought the rights to a mid-stage depression set from Gilgamesh, and Mankind added SC Pharmaceuticals to bulk up in its metabolic industry. In healthcare, Eli Lilly posted positive phase 3 obesity pill data and an overall survival win in Verenzio, while Regeneron and I don't even know how to say this name, Alinium, advanced RNA therapy in mesothelioma gravis. Wow. That lets you know that I don't know much about what's going on in the healthcare market there. All that being said, Eli Lilly showing good phase 3 obesity data is going to be big for investors there. I believe that Eli Lilly is close to a 52-week low as I'm reading this. Now we're going to jump to the world of insider trading. Of course, we track all of the dips that insiders are buying over the past few weeks. The biggest buyers were Incision Inc., ticker ECIA, which saw the CEO, a director, a 10% owner, all buy into the company at a 10-cent price point, coming after a 42% 1-month drop. It's going to be very interesting to see what happens there, although I'm not super interested in buying into penny stocks. We also saw buyers for Intella Therapeutics, Faraday Futures, Cality Biotherapeutics, and Kadi Inc., all buying after big drops over a 1-week period and a 1-month period. Advanced Flower Capital, ticker AFCG, saw a director buy after a 52.37% drawdown over the past year. We also saw big buys out of Sharps Technology, ticker STSS, with insiders buying at a $6.41 price per share, coming after a 99% 1-year collapse in the stock price. There were also some big buys, standout buys, coming with values over $1 million. Cantor Equity Partners, Reynolds Consumer, Resido, Aventur, Hilltop Holdings, and Asana all saw major buys coming from insiders. This isn't the last time or the first time that we're going to see insiders buying Asana either. They have been big on buying that company's shares. The company is down 26% year to date and is up 3% from its price in last August, and is down 43% over the past 5 years. Now, I'm not sure where exactly or why exactly all these buys have been happening recently. They've had issues with retention, but I guess the insiders see a big tailwind coming in some way, shape, or form. Maybe it's something to do with AI integration, but who could ever know? All right, now we're going to jump into our interesting trade ideas. For those of you that weren't with the newsletter last week or didn't read last week's newsletter, you missed the fact that I entered into a trade with BFST, Business First Bank Shares. They're, of course, a growing company based in Texas and Louisiana and are big in the mergers and acquisitions world and have been growing at an incredible clip ever since. I initiated at a position of around $25 per share, and the company is still sitting at that position. I'm expecting to see returns upwards of 20% after holding the company for a few months or a year. The company does look quite undervalued to me. Another stock that we recently sent out an analysis on was Qualys. I think that's how you say it, but the ticker is QLYS, and they were analyzed in our Berkshire Buy article that we sent out last week. This, of course, is where we take a stock and we analyze it through the lens of Berkshire based on everything that Buffett has said through his shareholder letters and his interviews that he's done that you can find, of course, all over YouTube. In the past, our Berkshire buys have performed incredibly well. Tickers like JBL, NSSC, and CACI have done exceptional, along with OXY, all of which were companies that we said Berkshire would likely get into or could get into, or they just fit the framework of the Berkshire company. JBL is up 21% since we wrote our article. NSSC is up 44% since we wrote our article, CACI is up 32%, and Oxy is up 26.49%. All those companies doing extremely well. Since our Qualys article midweek last week, we have seen a rise of 2.65% in the stock price and expect that to continue on. Cybersecurity, like I said before, is going to be a huge world in the coming future, especially with all these AI advancements, and it is definitely going to be a space that you want to be involved in. Now, regardless of whether you're going to invest in Qualys or not, something that you should be investing in or following are my personal portfolios. Hardly anybody that you're going to follow in a newsletter, in a podcast, in a YouTube video, wherever you're going to find them, they're not going to share with you one-to-one their actual portfolio, but that's exactly what I do. I have 3 main portfolios: my flagship fund, an AI secondhand effects portfolio, and a tech-focused growth portfolio, all of which my money is directly invested into, and I think yours should be too if you like what you're hearing on this newsletter and the podcast. Over the past week, the flagship fund was up around 1%. The AI secondhand effects portfolio was up around 1%, and my tech-focused growth portfolio was down about 1%. So nothing major happening there. Although over the past month, the flagship fund was up 2%, the AI secondhand effects portfolio was up 4%, and the tech-focused growth portfolio was up 7%. Now you're probably wondering, what are some of the companies that are driving these big returns in these portfolios? And I'm happy to run through a few of them with you here. In the flagship fund, our biggest holding and largest returner is, well, not largest returner, but our biggest holding is Occidental Petroleum, ticker OXY, which is up about 9% from the time that we put together our portfolio on autopilot. Google is up 17% since we put together our portfolio. NSSC, or NAPCO Security, is up 24%. Arista Networks is up 25%, and Monolithic Power is up 12%. We also have Cloudflare, which was a late addition to the portfolio, up around 10%. In the AI secondhand effects portfolio, Bloom Energy is up 101% since we added it to the autopilot portfolio. Uranium Energy Corp, ticker UEC, is up 49%, and XYL is up 9.88%. So we're happy with all of the gains that we're seeing on stocks in there as well. Now in the tech-focused growth category, ticker LMND is up 34%, Zeta, ticker ZETA, is up 33%, and multiple other stocks are in double-digit return territory, and we expect this to continue into the future. Of course, if you want access to all these trades, you can find us on Autopilot with the links in the newsletter. If you can't find us on Autopilot or don't want to find us on Autopilot, you can find us, I guess you're going to have to subscribe to this newsletter, and you can see all of our trades on our paid subscriber spreadsheet, which there are links to in the newsletter spread throughout all over the place. All right, if you're a paying subscriber, you're about to hear, I guess you're not about to hear, you're about to go read about in the newsletter, again, thesimpleside.substack.com. You're going to go read about all of the holdings that we currently have, the performance that we have on all these holdings, and our strategy going forward into the next couple of weeks. You've also got access to our weekly picks, so go and see all of that there, and I look forward to seeing you all next week.